Hello, everybody, and thank you for taking your time to join our Financial Literacy Revolution webinar. My name is Monica. I'm working for EGM Securities here in Kenya, and I'm just going to give you a little bit intro on what can you expect at today's session. I can see we have quite a number of attendees already. I'm sure there will be more joining as we proceed. But just to start with a short introduction. We started with the series of financial literacy webinars now a few months ago, mainly in collaboration with some of the major universities in Kenya. It was very evident for the longest time that general public, not only in Kenya, but in the whole developing world, needs some hands-on mentorship on how to take control of their personal finances. We have seen over and over again how people are falling for get-rich schemes and how they make fundamentally wrong decisions in how to invest or place their hard-earned savings. Very simply put, our webinar's purpose today is to guide you towards a path of financial freedom and show you show you that you don't need a lot to secure your financial future in long term. Before we start, please note that your microphones are muted for the whole course of the webinar, but that doesn't mean we can't have a really interactive session. You have a chat box in this webinar, so please use that to type in all your questions. I hope that at the end of the session, we have about 10 to 15 minutes that we can go over the most relevant questions. So without further ado, I would like to introduce you to Brian Myers. Brian is CEO of Equiti Capital based in London. Brian brings to the table vast experience. He's been working the Wall Street. He's been leading some of the biggest brokerage firms in the world. Brian, over to you.
Thank you so much, Monica. And hello, welcome everyone. And well done. Well done for signing up to this and attending on your Friday afternoon. We are at the beginning of a revolution in Africa. We're at the beginning of something where a lot of people now are realizing that for them to better their financial freedom, they have to improve. They've got to really understand financial literacy. They've got to make steps like attending these sort of webinars. So already you guys that are attending this are very far ahead of other people around you. And my hope is that you take some of the learnings from this and go back into your families and your communities and start to discuss this further. Before I crack on into it, a little bit of housekeeping. I would highly recommend that you would follow me on Twitter. The reason being is that some of the things I'm going to discuss today, you're going to understand it. I'm going to make it really simple because I think the worst financial advice is complex financial advice. It doesn't have to be complex. So it's simple, but by following me on Twitter, we talk about it consistently. And by talking about it consistently, it becomes habit. And that's what you really need to have when you're seeking financial freedom. You need to have a great financial planning habit. And I can help you with that by following me on Twitter. Use the hashtag financial literacy KE hashtag and FXPesa Kenya. We're looking for to give out some accounts, some trading accounts, $100 trading accounts. I'm really interested to have a great community around me on Twitter that are really active and interested in all things finance. And if you can show me that you've got a lot of interest and a lot of zeal and a lot of your own content around this stuff by using these hashtags, I'll notice that and we'll be in touch within kind of 3 days next week to give you a $100 trading account. Okay, so let's crack on. So, as I said, this is a revolution. Big words, big connotations, but it's true. This is a revolution that we're doing. It's Financial Literacy Month across the world next month, and we've been, as Monica mentioned, we've been for the last 3 months speaking to thousands of students, thousands of people on social media. Over the last year or so, we've helped train 50,000 Kenyans in financial literacy, FX, CFDs. Trading on margin, all of these things that are very important to literacy, and we continue to do that. But we really made a very strong concerted effort this year, leading up to the literacy month next month. So, one sec. Apparently the volume's low. So when I was younger, I thought that money was the most important thing in life. Now that I'm old, I know it is. So I always start with that quote, because let's be honest, money is very, very important. It's become one of the last taboos, right? People don't speak about it enough. People on social media, they will talk about practically anything in their life at all, but they won't speak about money. And young people and old people alike, particularly if they're bad with money, they won't ever go to people that are good and say, look, you do things the right way, I do things the wrong way. How can I learn from that? Now, this quote is very tongue in cheek, right? We all know that the best things in life are your children, love, fun that you can have with those around you, of course, but that is all heightened. Unfortunately or fortunately, however you want to look at it, that is all heightened by money. You sometimes you need money to put yourself in those certain situations to bring happiness to people around you. So let's not have it as a taboo topic. Let's have it as a topic that we discuss more. Okay, if it's so important and it only becomes you realize the relevance of it more and more as you get older, let's talk about it more. Today I'm going to take you on this journey. Okay, I'm going to introduce myself, the company. I'm going to talk about financial freedom, literacy, a really valuable bit that I would have loved to have had when I was younger. Would have been for someone to teach me from the mistakes that they had made over 15 years or so, and that's what I'm going to do with you guys. I'm going to go over some of the biggest mistakes that I've made financially over the last 15 years, hopefully allowing you to avoid them. I'm going to talk about the fact that everything's not linear in finance. You're going to have some problems along the way. I'm going to talk about social media. I'm going to talk about the rise of scams, and then we're going to talk about what next. Okay. So, who am I? So, I'm the CEO of I've been previous CEO of a few of the largest brokerages in the world. I've worked with all major institutions and millions of global traders. So I've worked with banks, I've worked with millions of retail traders. I've worked in America, I've worked in Canada, I've worked in Singapore, all over Europe. So I like to think that I have a 360 view of this game, the game that we're in, the financial game. I've seen it from all sides. And so I think I'm in a decent enough position to be able to advise you on some of these things today. I'm determined to improve global financial literacy, as I mentioned beforehand. And we're doing it as Equiti as a company. We're a global brokerage. We're based all over the Middle East, in Africa, we're in Nakuru, we're in Nairobi, there's other offices coming in Africa, we're in Latin America, Armenia, New Zealand, we're all over the world, right? We're a huge brokerage. And we set up the first East African online CFD and FX brokerage, EGM Securities, 3 years ago now. We did that because we know that there has to be someone that was going to come and offer safe access to trading in East Africa. There's far too many scams, far too many people running away with other people's money. So we came and we worked with the regulator to bring the first license. We're very proud of that. And then we designed FXPesa. FXPesa is it's for people that haven't traded before. It's giving you real ease of access, ease of payments, easy, very easy to onboard within minutes, and very easy to start off with your first trades. So that's the difference between Equiti, EGM, and FXPesa. What is our mission in Africa? So our mission is that we're here to do this financial literacy revolution. We're building this new industry, as I mentioned beforehand. We're doing that while we're creating local jobs. I believe that this industry is going to be a huge source of jobs for Africa, for Kenya, for the next 10, 20 years. And I've seen that definitely happen in the UK and places like Cyprus and stuff like that as well. We think this is going to be a brand new industry that we're pioneering. And a lot of the people on this call, your family, friends, etc., will probably at some point might even work in this industry. So that's something we're very proud of. We maintain a 50-50 male-female split in executive rates, very important to us. And we're always doing things like this, social responsibility, tours, lots of things where we're giving back as well. So that's our mission in Africa. So why am I doing this? Okay, so this financial literacy issue is a huge issue, arguably the number one problem in today's generation and economy. A lot of people, like students, the young, their debt is huge. Global property prices are huge. The young are getting hustled, and there's a lot of schemes. They're losing millions. No matter what age you are, there are more people coming into financial trading now than there was at any other point in history. It is the whole world is trading. Everyone has got an opinion. Everyone thinks about where Apple's going, where's Tesla going, was Bumble a good IPO, what's going to happen with Roblox, what's happening with crypto. Everyone has got an opinion now. It's a fantastic thing to see, but it means that there's a lot of naive people coming into the market for the first time. So this is another reason why I'm doing this, to make sure that I help those people that are coming into the market. I'm very passionate about this. I give this same presentation to my family, to my friends, anyone that wants to listen to this. I try and help, and I research it regularly. Why not share that knowledge? And as I said, let's get everyone talking about this. So I've explained myself, my company, what we're doing, why we're doing it. Let's get into it. So many years ago, one of the first things that really struck true for me, one of the first times when I realized that I had to do something about investing, I had to start taking this seriously, was when I just sat there and I just thought, hold on, is this really what life's about? Am I going to work for 40 years to be free for 13, hopefully 20, 25 years or so, right? The retirement age is 65. In Kenya, 70% of Kenyans retire with less than 1 million, right? Less than $10,000. So at retirement age, hopefully at that point, you're blessed with a wife, a husband, a partner, children, your parents, hopefully, you've got a lot of dependents and hopefully a lot of time in front of you. How are you meant to take care of all of those people and be financially free with 1 million KES? Right? I put this on Twitter. I said that once you realize you're working for 40 years and you end with a small amount of savings for retirement that can last decades, this doesn't make mathematical sense. You know that this is a necessity, investing in financial literacy. And it's great to see you guys that have joined this webinar today. I believe the mass majority of you must feel the same way, right? We all feel the same way. We feel in our heart that you're not going to earn your way to financial freedom. You're not going to earn your way through your job to a point in time when you know that you are able to do whatever it is you want to do. So once I knew this, I realized that, hold on, I want to be financially free. I want to have financial freedom. What is financial freedom? Well, financial freedom means something different for everyone. For me, it means that I've got enough savings, I've got enough financial investments where I get automatic income coming to me rather than having to work for it all the time. I've got cash on hand. So when life gets in the way and there's an emergency that happens, I can pay for that emergency with it not impacting my month or my year or my life, right? I can afford the kind of life for myself and my family. What it also enables me is that I'm very fortunate that I do a job that I'm very passionate about and I love, right? I know that's not the case, unfortunately, for the majority of people. But when you make certain moves in investing, you can try your hardest to pursue the career that you want without having to be tied to a job just because it pays the bills. And it's so scary to leave that job that you don't like to go and do something that you love because you need that money. So that's financial freedom. That's what it means to me. And I talk about financial freedom with people a lot, right? And I put it into a pyramid. And I talk to people about there's a pyramid and a progression that you can go on where you've got to realize where you are on the pyramid, realize where you want to go, and realize the steps that that's going to take. And it takes time and it takes knowledge. And we're going to talk about that today, right? But a lot of people, they don't realize that this pyramid exists. They don't realize financial freedom is a thing. And anyone that comes and seeks it from day one, they start here, right? They decide it's time for a change. They decide that they need to do something about financial freedom. And if you're at this point when you're broke, you're buried in debt, but you've decided that it's time for a change, you've already made the most amazing first step that you can make on this pyramid. And then what you need to do is you need to start taking control of your money and your future. You need to start understanding some of the things I'm going to talk about. You need to start saying, okay, I'm going to get myself out of this broke, buried in debt phase. I'm going to go up the pyramid. I'm going to start building wealth. I'm going to secure my financial freedom. I'm going to automate my financial systems and maintain financial control. So this is to be aware that these financial pyramids, this freedom pyramid exists. Please be aware of it. And to get up the pyramid to financial freedom, you need to have financial literacy. So I always talk about patience plus financial literacy equals financial freedom. That's what I talk about on Twitter all the time, right? So what is financial literacy? Well, there was a survey by Standard & Poor a year or so back that defines it. That they went around all the different countries in the world and they started asking very basic questions like diversification of risk, calculating interest repayments, knowledge of transaction costs, and they were asking these to all countries across the world, right? And it was to understand essential financial concepts about saving, investing, and borrowing. And when they asked these questions in Europe, most European countries had a literacy rate of about 65 to 75%. So that meant that people in those countries, 3/4 of the time, they knew about these things. So, financial literacy revolution. So in Europe, it was that amount. Unfortunately, when they went to Africa, this is what they saw. And I know normally everyone I speak to in Kenya hates losing to Tanzania, but Kenyans, only 38% of Kenyans understood these really basic things, like understanding repayments, right? So this has to improve. Until we get this improved, financial literacy, again, you guys making this unbelievable first step, until we get these literacy rates improved, we're never going to get as many people as you need to see around you in Kenya around and up into the financial freedom. This is the key. So how do we get financial literacy? What is financial literacy? What do we need to improve on? For me, I break it down into 4 pieces. I break it down into saving, understanding, investing, and being patient, right? Save, understand, invest, be patient. I've read over 10,000 hours of financial literacy. 10,000 hours, no problem at all, right? In my life. And I would say of that 10,000 hours, a lot of it is noise. A lot of it is so much noise, but there's probably about 1,000 hours of it that was very interesting. And there was probably 1 hour that was critical. And that's this hour that I'm going through with you now. And in amongst that, this mantra of save, understand, invest, and be patient, right? The save part of this is the hardest. All of those that are on this call, I don't know your personal situation. I don't know your circumstance. I don't know how hard it is for you to save money, to hustle for a second income. But what I do know is you have to do it. If you want financial freedom, you have to have funds, a freedom fund, to be able to allocate and invest. And the only way of doing that is to save money, right? To be able to allocate. Now, I can't tell you what you need to do, but what I can say is, there was a guy on Twitter that got me about 2 months ago, and he said to me, I just wish someone would have taken 20% gross away from my income when I was young. And the reason he said that was because he would always say, I can't afford that. But if someone was taking from it at source and allocating it back to you to invest, you would just find a way of dealing with it, right? And you would have that money. And if he'd invested that money many, many years ago, he'd be well on the path now to financial freedom. So I say to people, can you make little choices? Can you make these choices that can have a huge impact, right? So can you, instead of eating out, can you find lunch or the equivalent of? Because if you can save that 800 k's a day and invest it at 10% for 40 years, you end up with 113 million shillings. And that's because of the power of compound interest. And I'll go into more detail about that. So can you make these little choices that's going to have a huge impact on your life? I don't know. That's somewhere where people have to soul search themselves and really figure out a way of making it happen. But you have to make it happen. It's the same between the side hustles, right? Without even looking at compound interest. This is what I look at. If you're the sort of person that goes and makes 4 million a year, and you earn 20,000 a week from a side hustle, in the 5th year of savings, you'd have 25.2 million KES, right? But if you're the sort of person that doesn't have a side hustle looking for money, instead you're the sort of person that just succumbs to wanting more things, the newest things that's there, and making silly decisions, so you're spending 20,000 a week, you'd end the 5th year with 14.8. Now that's without me talking about what to invest it in, right? That's just the difference between what you can do as a saver rather than a spender. So now you've saved some money. Now what do I do? Okay, I've saved some money, Brian. It's been hard, but I've got a bit behind me now. What do I do? Well, now you need to understand, right? You need to understand. You need to read. There's certain books that are just, game changers. They really will change the way that you look at investing. A couple of books there on the screen. I've got lists of other books. Ping me on Twitter anytime. I'll let you know what sort of books I'm talking about. But they will really make you understand the mindset that's needed to be successful financially. And you just got to keep increasing those building blocks, those foundational building blocks of your knowledge. Listen as well. Look at some podcasts. There are podcasts, it's such easy access to podcasts now with some really intelligent people that know what they're doing. Please have a look at podcasts, have a listen. We're in this situation in Kenya where the majority of people spend between 6 and 8 hours on their mobile phones, right? The mass majority of that is procrastination. It's on WhatsApp, it's on social networks. What I'm saying is, can you allocate some of that time to read instead? Go and find some really strong financial literacy. Obviously, we can give you that at FXPesa for sure. Come and listen to our podcasts, listen to other people's podcasts, build your knowledge, allocate just some of those hours that you're all spending on your mobile phone to doing this for your future. And of course, when you've got that, you can also practice so that you're not spending your own money, right? Until you're very comfortable with the platforms. We offer demo accounts. Come on board, try a demo account, risk-free. Understand what it is you want to trade. Are you going to trade Apple? Are you going to trade oil? Are you going to trade silver? Are you going to trade FX? We've got all of these products for you. Come and practice. And when you're practicing, and of course, you're thinking about live trading now, what should you be thinking about? Well, you should be thinking about global. Okay, this is a real important part of financial literacy. I think that one of the issues I saw in Kenya was the mass majority of people, if they were trading or investing, it was all in local Kenyan shares plus bonds. And historically, African stock markets, even last year in 2020, they're losing somewhere between 7 and 15%. Whereas if you're thinking about global US markets, access to these global markets, some of these markets were up 80%, 135%. The Nasdaq was up 43%, even in a coronavirus year. So it's about thinking global when you think about stocks. It's about thinking global, FX, commodities, crypto, indices, multi-asset, right? When I think about what I do in investment, this is kind of like my portfolio, right? I look at US equities for sure, and I'll tell you why I look at US equities. I look at some ETFs, I look at commodities, gold, oil. I always stay on cash to take advantage of any dips. And cryptocurrencies, I've owned Bitcoin for a long period of time. I don't buy any cryptocurrencies at the minute. I've just held some Bitcoin for a period. And short-term trading. So short-term, I'm always going in and out of the markets of things that I like and enjoy and excite me and things that I think have got sound fundamentals and technicals as well. So I'm always trading for long-term and I'm always trading for short-term as well, seeking that return. So patience, guys, this is a really big one. Okay, if you're only going to take a few things away from this webinar today, patience would be right up there in the top for me. This is the one that I wish that someone would have been able to grab me when I was younger and said to me, have a bit more patience with yourself. I'm lucky because I'm in an industry where I was getting paid to learn about finance, right? Well, lucky or not lucky, I wanted that for my life. And that's why I stuck the course. But 53% of people, and this is 2019 data, I'm guessing it's going to change for 2020, maybe even a bit more, but 53% of traders finish trading within 1 year. Why do they do that? Okay, think about what's happening now, right? There are so many people, millions of people entering the markets for the first time. And when they enter, they're getting told what to do by memes, by influencers, these guys that have no idea what they're doing, and they're telling everyone to go into Dogecoin or some really volatile, Dogecoin, where's that? Off 15-20% in the last 2 weeks. It'll go up 40%, come down 30%. And so many people are getting burned that they just think, this isn't for me. This is too complex. They told me I was going to make lots of money. I didn't. I'm gone. And they go within the first year. But the thing about that is 80% of investors claim to make constant profits if they stick with it over 4 years. And that was definitely the same for me, for sure. I made loads of mistakes in my first couple of years, and I could have given up a lot of times. I could have given up, but I didn't. I stuck with it. And over the last 10 years, I'm a much better investor, and I'm so pleased and I'm so grateful for my future self. When I get to 55, 60 years old, I'm so pleased that I'm sticking this course. I'm so pleased that I had patience. It's like most things in life, right? It takes patience. You've got to be patient with yourself to learn. You've got to be patient with your long-term investments. You've got to be patient to understand things like we'll discuss now, compound interest, etc. Takes a lot of patience. And what I'm finding more and more with traders is, unfortunately, it's becoming more like the rest of society, where everyone wants everything quickly, right? If you don't think you can get 100% return in 2 or 3 days by trading GameStop, even though the mass majority of people had no idea why they were trading GameStop, if you don't think you can get that return, it's just not interesting to you. And that's just not what the investing's about. Investing is like the cliche, growing a tree, sowing the seed and watching a tree grow over a period of time. It really is like that cliche. So patience is, very, very important. Warren Buffett, he says the stock market's a device for transferring money from the impatient to the patient. This is so true. Okay, let that burn into your eyes. Last March, when coronavirus hit, and the huge impacts that's had across the world, health impacts, and I'm very sorry to hear that you guys are going into further restrictions from your president announcement today. I'm in lockdown still in the UK. It's terrible on practically all aspects, but it gave investors an opportunity to make money, and that's the truth. Okay. In March, when everyone was selling, when a lot of people were selling their positions in March because they thought the world was coming to an end, the patient earned that money, right? Because the patient had their position and they bought more. They bought more, and the markets came up from March. So the impatient in March of last year lost billions of dollars, and those billions of dollars moved all the way over to other people that had a position, knew that, didn't know, but they felt that over a long period of time, there will be a handle on it. The economies will improve. The stock still had sound fundamentals. They had patience. They made money. So where are we? Let's have a little sense check. Well, it's kind of halfway in. So we've got a to-do checklist, right? We've got a to-do checklist of, what am I going to do? I'm going to build a freedom fund. I'm going to go out there and I'm going to get some money. Right, I'm going to get some money because I'm going to allocate it to this because I want to have a better future. You're going to understand. You're going to allocate some of those hours, those procrastination hours of surfing mindlessly on your phone, like we all do. Allocating just a small percentage of those hours to reading, discussing, listening, understanding. When you're looking for that, what are you thinking? You're thinking global, not local equities and bonds, not just local equities and bonds in Kenya. You want to think about US stocks. You want to think about gold. You want to think about oil. You're going to start to learn these things if they're of interest to you. Multi-asset. You're going to have a blend of short and long-term trading and investing. You're going to understand fees and taxes, right? Always make sure you understand how much money you're spending on things. At FXPesa, we have a from zero pip plus commission premier account for your trading. Make sure whatever brokerage you go with, you understand the fees and your personal tax position, because that can really chip away at your financial future. invest with a trusted and regulated broker, right? This is, of course, this is on the to-do checklist. One of the things I'm scared about, because we're investing so heavily in Kenya, one of the things that I hope doesn't happen is that I know 4 or 5 years ago in Kenya, there was a lot of unscrupulous people, villains, that were setting themselves up as FX brokerages. People were giving them money, binary option companies, giving them money, crypto, no, whatever it is, giving them money, and they're not regulated. They don't have client money rules. They're not regulated anywhere in the world. They just got people's money and left the country. And why I'm worried about that is because that will damage this amazing, beautiful industry that we're creating and all the jobs that we're going to create in the future if that happens again. So the way we stop that from happening is everyone that invests with a trusted and regulated broker like EGM, FXPesa. And then finally, patience with yourself, with your investing. Be patient, as I mentioned beforehand. So that's the to-do list. So we know what we're going to do now. We've gone through that. What don't we do? Okay, let's learn from my mistakes. I'm going to go into those top 3 in more detail. So let's just look at these bottom 3, right? So I was so stupid when I was younger that I didn't even understand what a bank and a pension or mutual fund was, right? I just didn't understand. I never sat down and actually thought, what actually are these things, right? And in the UK, believe it or not, on my current account, I get 0.1% interest. 0.1% interest, right? It's laughable, right? And what I didn't realize is that what I'm doing is I'm going to a bank, I'm giving them all of my money, and of course I get value because I get debit cards and access to funds, etc., etc., of course, and security. I get that. But I'm giving them all of my money, and what they're doing with it is they're going to the markets and they're trading stuff that I could trade. They're making 10, 14% return out of this, and then they're giving me 0.1% back. And more than that, the mass amount of money they make from everyone's money, they then loan it back to me for a mortgage for a house at an increased percentage rate. So they're making thousands more percent return on my money and then loaning that back to me so that I get another percentage I have to pay back. And once I started to realize this with banks and pension funds, I started to think there's of course there's a use for these guys, but they're never going to give me the returns that I want for my life, right? And I'm in a position that I can change this. So I started to trust myself. I started to trust what I wanted to do with my money. And I'll show you some of that stuff in a second. I thought you could earn your way to financial freedom. You can't. You can't earn your way to financial freedom. Assets versus liabilities, right? So I was always buying liabilities. I'd buy a new car and lose 25% of its value the second I drove it off the forecourt. Why was I doing that? And more to the point, why was I doing that and not having assets that was giving me income? So my top 3 mistakes, here they are. Top 3 mistakes is I was underestimating the long term and I was overestimating the short. So which should be the other way around. I just kept thinking when I was younger, I was going to make a lot of money by doing these really risky trades, right? Investing a lot of money and thinking that I was going to make more in a month because 10 years, 15 years, 20 years just seemed like an absolute lifetime to me. And now in my 40s, I realize it goes very, very, very quickly, right? And everyone's going to feel the same within their life. And really, what happens here, and this is a study by JP Morgan, that over 20 years, in the majority of situations where you've been holding onto shares, in especially like indices, etc., over 20 years, you've got a 0.1% chance of losing money, right? 0.1% chance, whereas 40% chance within a month if you think you're just going to go in and out of the markets. So I had it all on its head. I was always thinking that it was going to be I was only in it for the short term, whereas years ago I should have been looking at it for the short, right? The second big mistake, and if you can get the poll ready, please. So the second big mistake is I had no idea. I did not fathom compound interest. Right? What is compound interest? Compound interest is interest on interest, right? It's the result of me investing in something, earning money from it, reinvesting that money that I've earned from it back in, and then it just goes again and again and again, and it's getting a larger core investment that's earning more revenue, that's getting more invested back into it, right? And so let me just do a poll here while we look at this. So if you look at the poll on your screen, be interested to see this. There's There's 300 of us. Have a look at the poll. Can you see it? Where is it? So if you're looking at, sorry, I can't see it on my screen. Okay, well, I know it is. So it's on compound interest, right? So it's you looking at funding into account a million total over 10 years, a million KES total over 10 years, and then allowing it to compound over a period of time. What do you think would be the end result at 65 of doing an investment for a child or whatever around you from the age of 1 to 10 of a total of 1 million KES? Can you see? Can you see? I can't see the answers on it, Maggie. Okay, yeah, I can. Okay, so the answer is 2.9 billion KES. 2.9 billion KES. Okay, so this is the thing. You can see here that 23% of you got that right. 23%, which is great. This is the power of compound interest. 100,000 shillings invested at 1 year old every year for 10 years, compounding at 14%, would bring you 2.9 billion KES. Right? Now, this is what I just didn't fathom this. And sometimes when I tell people this with compound interest, they just don't believe it. They say, no, you must have got it wrong. Your calculator's broke. But this is the facts. The fact is that I had this this form here on the left-hand side. I've kept this for 10 years, and it was one of the real eureka moments for me. Excuse the pun. You'll see the pun in a minute, but it was a eureka moment for me that I saved this table for almost a decade because I thought to myself, how can this be? Ben invests almost 5 times less and gains 55% more than Arthur, right? Just because he started earlier. So 5 times less because you invest at another period in time. How could this make me a KES billionaire? So I sat down with some people and I started to look at it to say, how could you become a KES billionaire if you were going to start this at 20? Now you can do this table yourself, of course, and if you start later on in life, you just need to invest more money. But so the earlier you start, the less money you have to invest. But 100,000 KES invested per annum in your 20s, increasing to 2.5 million in your 60s, through that table on the right-hand side, assuming a 14% return. I'll show you why 14% return in a second. That would leave you as a billionaire at retirement. Now, so many times, if anyone ever asks the question, how would I become a billionaire in Kenya? I would think the main answer is you're not going to, you're dreaming. Bearing in mind, you know, the top 1% of Kenyans are worth 2.2 million, right? $22,000. That's the top 1% of Kenyans. So if anyone's asking the question in Kenya, how do I become a billionaire? Mass majority of the time, people are going to say you're dreaming. Or they're going to say something like you have to be a fintech unicorn, or you've got to be famous, or you've got to be a footballer, something spectacular in sport. Who would sit down with you and say you can get this return if you start investing this amount through your life, hustling, getting money, saving? This is what it would take to become a billionaire at 65. And why 14%? Well, 14%, if you look at this chart, over the last 10 years, we can look at various different asset classes. We can look at Japanese equities, European equities, infrastructure, cash, and annualized over the last 10 years. If you were to invest in US equities, particularly looking at the S&P 500, you would get on average 14% return. So going back, so does that mean every year? No, of course not. You can see in 2019 it was 31% return, right? But in 2018 it was a minus 4.5% return. So the market's going to go up massively. It's going to come down massively over time. But if you've got patience and you know what you're doing in those situations, you can get an annualized return of 14%. And true enough, I've been doing this, as I said, for very, very seriously for 12 years. And my returns have kind of mapped exactly how I planned them to map out over that period of time. And I've had some really bad months. I've had 2 really bad years in that time. But where I am is exactly where I thought I was going to be. So, in that kind of way, the markets are very, very, very unpredictable. But over a period of time, the predictability is there, right? I showed you the old form of 0.1% chance of loss over 20 years. So we get to this point where my biggest mistake is I didn't understand compound interest. But these two guys that are, two of the guys I look up to the most and infinitely more clever than me and most people, Warren Buffett and Albert Einstein, these guys are saying that Warren Buffett, he's worth $100 billion, Warren Buffett, from his investment. He bought his first stock when he was 11 years old. So, yeah, he's in America. Yeah, he's got lucky genes. He's an intelligent guy. But compound interest, that's the main thing that drove him to 100 billion in net worth. Compound interest, buying, not consistently staying out of the markets because you think it's too high or it's too low or anything, just getting involved in the markets, staying in the markets, having patience. And Albert Einstein says that it's the third wonder of the world, right? He who understands it earns it, he who doesn't pays it. And it's so true. It's so true. Once you understand compound interest, you don't want to go and borrow money because you invariably you're giving compounded interest back to the people that you're borrowing from, making you go further into debt. Whereas if you know what the beauty of compound interest, if you really start to understand it, and you can have patience, you earn it, and it puts you in such a fantastic position for later life. The third big mistake that I always made was I was always a consumer, never an owner, right? Always a consumer and never the owner. So what does that mean? Well, it meant that every time there was a new iPhone out, I bought the new iPhone. A lot of the times I didn't understand why. Well, someone told me it's got a bit of a better camera, had to have it. iPad. But I didn't own a piece of Apple. I was buying all of their products. Now I'm looking in front of me. I've got my iPhone. I've got my AirPods. I've got an Apple Mac. I've got my wife's got the watch. Apple everywhere. So I'm spending money as a consumer, but I'm never making money from them. Now, about 6-7 years ago, I started to really build a sensible Apple position. And the reason I did that is that by buying Apple, and I trade it short term sometimes as well, but I buy it for the long term. By buying Apple, I'm now an owner of that company, and I benefit from this amazing company. This company that's, it's the world's most profitable company, $57.4 billion in net income last year, 57.4 billion. And I own a part of that company by owning shares. People don't understand. People are starting to lose sight of this, right? Because it's not very attractive. You can't put it in a meme. And influencers can't talk about this stuff. It's not very attractive, is it? Own a tiny part of Apple and it will give you fantastic returns over 20 years. That's not something that an influencer can get a lot of followers saying. So they're not saying things like that. Instead, they're drawing pictures of dogs saying Dogecoin to the moon, right? That's what they're doing. So I became an owner. I did that with Amazon. I'm getting box after box after box delivered from Amazon, spending lots of money there. Why not buy their shares? It's the same thing with gold. I've got gold ring, my wife's got gold ring, gold jewelry, all of these things that gold in my mobile phones. I'm a consumer of gold. Why not become an owner of gold? And I became an owner of gold. Exchange rates on currencies. I'm very fortunate in my role. I'm flying around the world a lot, and I was wasting a lot of money on exchange rates, losing money on exchange rates. But I never thought to myself, how do I make money from exchange rates? How do I make money in FX? So my mind shifted from always being a consumer, and I'm still a consumer, of course, but not always. Sometimes I want to make money from things, not just lose money on things. Something to consider for yourself. So what I don't want you guys to think is that I'm making this sound like it's exceptionally easy, right? I don't want you to think I'm just saying it is easy over a period of time once you get through the hard initial phases, as I'm talking about. But there's going to be problems along the way, right? There's going to be corrections, 10%, bear markets, 20%. There's even been a couple of 50% downturns. So you're going to realize that there's going to be these things, we call them in England speed bumps, right? These large bumps in the road that stop you from speeding down the road, so you have to slow down. There's going to be speed bumps, but they're short-lived, and you shouldn't fear them. You should try and embrace them and take advantage of these things that happen, these problems along the way. Because when you do get these speed bumps, If I break down the cyclical nature of the stock market, I can see that, let's take the 2008, 2009 financial crisis, right? At that point in time, I remember that clearly, 13 years ago. I remember everyone talking about going into early 2009, 12 years ago. This is the end of the financial markets. This is the end. Like, forget about 1929, the Big Depression. Forget about everything. This is the end of the financial markets, financial instruments. Get your money out of stocks. The world's going to blow up. And these things happen every few years. I've seen this happen. Now, the market lost 57.6%. There was a decline in the S&P 500 of 57% at that period of time. The bear market, the bottom of that, was March the 9th, 2009. And then in the next 12 months, the market came back 69%. And really, it's been almost on a charge ever since then. So, the people that had patience in that environment where they bought steadily as the market was coming down, whatever they could afford, and had a lot of patience and a lot of nerve, those people have had life-changing returns. Absolutely life-changing returns. Same thing happened, with coronavirus. A lot of people, instead of selling everything, that's it, the end of the world, we know it, this is impacting the financial markets, there's not going to be such thing as London anymore, there's no such thing as New York anymore. All of these things I heard again last year, but the market comes back. The speed bump. So let's touch on a really important topic for me. It's this social media, it's the logic versus emotion. Okay, a lot of people on this webinar, you'll be involved heavily in social media. You'll have lots of influencers around you. Some of you are very young. And there's big problems happening here with social media, because what it's doing is it's tapping into people's emotions rather than their logic. As I mentioned earlier, right? People are making investment decisions over memes, like going to the moon, or a funny meme, or TikTok, or whatever. They're making decisions with their hard-earned money, and this is what really it really does get to me, because I'm thinking to myself, I do this webinar to thousands of people. I'm asking these people to go and really save money, make some life changes to invest for their future. And then a lot of people now, newbies, when they get this money, they're going to go and buy Dogecoin, or they're going to go and buy a cryptocurrency. And there's no problem doing that if obviously it's legal in your country, etc. There's no problem doing that if you're doing it as part of a portfolio, or if you're doing it because you understand why you're doing it, right? I'm finding the mass majority of people that are investing aren't doing things like, I'm invested in Apple because it's the world's most profitable company. Its service income is through the roof. I think that everyone at some point in the future is going to have a wearable for their health. The sticky nature of Apple means that people can't disconnect. I've got loads of fundamental reasons why I buy Apple for the long term. I'm speaking to a lot of people of why they buy certain cryptocurrencies, or why they're buying certain stocks, and they have no idea why they're doing it. Right? I'm doing it because Wall Street Bets told me to on Reddit. 10 million people on Reddit now on that forum. They're telling me, they're saying stuff I don't understand, but they're saying do it. I think they're making money. Now, the problem with this is, guys, is that I don't see how you're ever going to win by doing this personally. Let me explain. Say you get in at the right time by like a GameStop trade, right? And you get in at the right time, you make a lot of money. Great, you were one of the lucky ones. You didn't understand why you did it. You thought it was a war with the hedge funds. You didn't even know what that meant. You did it anyway. You've made some money now. What are you going to do? You're going to take that money and start investing sensibly, or start investing into real assets, look at dividends? No, of course not. What you're going to do is be annoyed that you didn't put more money on the first one, because you saw how easy it was to make money. And you'll go again and again and again, and you'll go again until you lose all of your money. Right? That is what happens with the mass majority of times. Even as bad as that, say you invest at the wrong time and you lose 60, 70% of your money really, really quickly in one of these very high risk volatile things, you're then in a situation where you think, this investing is not for me. I've just saved up $1,000 because I thought I was going to be a billionaire when I was 65. I've just invested $1,000 into XYZ that was very risky. I lost 60% of that, $600 in a couple of days, and I didn't even know why I was investing in that. You're never gonna trade or invest again. And that is so bad because you've lost this great opportunity to improve your life and your family's life forever because you just walk away from it. And influence is the same thing. A lot of the influencers that are online right now, they haven't been there and done that. They've been in the markets for a year. It's like that funny meme that is going around about that, saying, never in all my 3 days of trading have I ever seen anything like this. And it's funny because there are so many people that are investing for this small amount of time and then becoming an influencer. They bought a small amount of whatever it is, and they're posting about it on social media, and they're putting themselves next to a Lamborghini and a Range Rover and a Tesla, and people are thinking, I want that. Emotionally, I want that. So I'm going to do what they're telling me to do. And it doesn't end up well, right? And another problem we've got as well at the minute, not just social media and influencers, but we've got scams. Scams are a big issue. Scams are a really big issue. Don't do it. But if you were to go into your Outlook right now, into your junk box in whatever email you use, you will probably have seen that there's someone tried to scam you because of using cryptocurrency, probably Bitcoin, 5-6 times in the last 48 hours. Right? Scams are everywhere at the minute. Everywhere. There's, Elon. Some people are hacking certified Twitter accounts and saying, "Send me some money and I'll send me crypto. I'll send you double back." And people are falling for this. So, it's this emotional thing. Don't fall for this stuff. In my humble opinion, and it might be unpopular with a lot of people at the minute, particularly these influencers. I don't think that you're ever going to get financial freedom by following these shortcuts. I think you're liable to get scammed. I don't think a lot of the influencers know what they're talking about. And I think everyone needs to go and instead save, learn themselves, understand what they're doing, invest and be patient. Right? So what's next? Coming to the end. So what's next? Well, what's next is, of course, start. Right? That's what's next. We need to get to this point where if you haven't thought about your financial future, you need to start. If you're an experienced trader, then I would love to hear from you. What else can you do? There's other things that we need to be doing. You need to keep on growing your knowledge. You need to maybe think about, if you're an experienced trader of local equities and bonds, think multi-asset, start understanding FX, start understanding what else is going on in the world as well. Whatever you're doing, just start, okay? Don't procrastinate on this any longer. Go for it. And when I say go for it, I mean, a lot of the times I'm getting asked questions, is it worth investing at the minute at all-time highs? Well, actually, the returns are all-time highs. And remember, I got this, I did this slide about, it's a JP Morgan review. I did this for the first time about 3 months ago. And 3 months ago, it was at all-time highs. And since then, I think there's probably been about 7 or 8 new all-time highs since 3 months ago. So I would say to people, don't think that you're going to time the market. It's about time in the market, not timing the market. So start if you haven't already. Okay, get to understand this stuff and just dive into it. Obviously in understanding your risk, understanding what you're doing, understand, invest, and then be patient. So in summary, I think you guys are going to have a hell of a lot of fun with this stuff as well. I've had so much fun with investing. Even when I've made mistakes, I've always known that I'm learning. So it's so much fun to get involved in this. And of course, it's even more fun when you start seeing the financial benefits. Understand it's not an option. This is a necessity. Commit to this. Save, understand, invest, and be patient. As I keep saying, don't fall for these social media influencers and online scams. Use social media. Don't be used by social media. And start today. And the path to success is to take massive determined action. So just go for it. Understand what you're doing. Allocate the time. Go for it. We're there to support you. FXPesa, EGM, we're there to support you every step of the way. I want to keep talking to you. Keep speaking to me at BJ Myers UK, at FXPesa Kenya. Keep the conversations going. And I think you're going to start building the foundations of something that's going to be absolutely fantastic for your futures. Thank you so much for your time, guys.